All right. So I'm going to show you my beautiful artistic skills here. What do you suppose that is? Well, that's my rendition of a cow. What do you suppose that is? Well, it's a bucket, of course. Doesn't it look like a bucket? Okay, so what's in the bucket? Well, if you haven't figured it out by now, that's milk. Where does the bucket get the milk? The bucket gets the milk from the cow, right? Okay, now here's the real tough one. If you can guess this, you are really smart. What do you suppose that is? It's a rat hole. You know how you can tell? There's all kinds of rat droppings around the outside of the hole. That's how you know it's a rat hole. Now, let me ask you this. What is the worst rat hole you can think of? I mean, the worst rat hole that's ever been created on planet Earth. I think it's the IRS. That's right. You got to agree with me, especially when you look at how much money has been going to that U.S. aid groups that's throwing money all over the world for no good reason and padding the pockets of all the politicians. You ever think of a rat hole today? Elon Musk has proved that the IRS is a big rat hole. Now, here's the real tough question. If you had to throw one of these two items down the rat hole, which one would you throw? Come on, it's going to be a hard one. Which one would you throw down the rat hole? The cow or the bucket of milk? The milk, of course, the milk is what you'd throw down the rat hole. Why? Because the cow can produce more milk. So if you throw the bucket down the rat hole, you still have the cow, right? So think about your business as being the cow. So if you have a manufacturing company, a sales, marketing, a distribution company, professional corporation, you name it, that business is your cow. And that cow kicks off the milk that provides cash flow for you to do whatever it is you need to do. And one of the biggest mistakes I see people make is they say, you know what, I got a big enough estate, I got big enough net worth. You know, if I drop dead and the IRS wants 40% of anything I have over $30 million, I'll just sell it. Which means you take this cow and you just eliminate the cow and you have no more buckets of milk to be able to do things. It's a big, big mistake. Now, what we suggest a person do is they keep the cow, they let that cow keep producing the milk, but you take and you put a little spigot on this bucket and you use a little bit of the cash flow that's coming off that cow every year and you set up a life insurance trust. And when you send the money to the life insurance trust, then what the life insurance trust does is they send the money to an insurance company. And we figure out how much cash that 40% represents of the total estate and what kind of a bill we're going to need to pay the IRS. And we plan ahead for growth, but we figure out what dollar amount that we're going to need. And we insure mom and dad to make sure that there's liquidity to pay the tax. So at death, what happens is the insurance company writes a big check to the life insurance trust, and the life insurance trust writes a check through the estate and throws the life insurance proceeds down the rat hole. So the family gets to keep the cow and all the milk the cow will produce going forward. So this is where life insurance comes in and is really, really important. It'd be crazy to sell the cow and lose all the milk when you can take a little bit of the milk every year and fund an insurance trust to have the cash to be able to throw it down the rat hole so the IRS leaves your family alone, the business stays intact, and your kids can keep running and operating the business.